How much does your mood about the economy actually impact the real thing? Well, more than you might think. And right now, it looks like a lot of Americans are getting a little nervous. According to the latest data, consumer sentiment in the US just hit its lowest point in 4 months this September. That means people are feeling less confident about their wallets, their jobs, and the overall direction of the economy. Let's break down what this actually means. Consumer sentiment is a fancy way of saying, how do you feel about your money and the economy? It's measured by surveys that ask regular people how they think things are going and what they expect for the future. Economists pay close attention to this number because, believe it or not, how we feel about the economy can affect how we act. If people get worried, they might hold on to their cash instead of spending it. And when consumers pull back, businesses feel it. Less spending can slow down growth and even trigger layoffs, which only makes people even more worried. A real domino effect. So why are Americans feeling uneasy right now? The latest report points to a few culprits. For one, inflation is still a big concern. Prices for groceries, gas, and just about everything else have been climbing steadily over the past couple of years. While inflation has cooled a bit from its peak in 2022, it hasn't dropped low enough to make most people feel comfortable. For many families, especially those in lower and middle-income brackets, every trip to the store is a reminder that their dollars just don't stretch as far as they used to. But inflation isn't the only thing on people's minds. There's also growing anxiety about jobs and the overall strength of the labor market. Lately, we've seen some high-profile layoffs in sectors like tech and finance. And even though the unemployment rate remains historically low, there's a sense that the ground might be shifting. Business conditions, according to survey respondents, are looking riskier than they have in a while. Some are worried that companies might start to pull back on hiring or even cut jobs if the economy slows down further. Let's put all this into a bit of context. During the pandemic, consumer sentiment absolutely tanked. We're talking some of the lowest readings in decades. Then as things reopened, there was a big rebound. People were excited to get back out there and spend money. But as inflation started to heat up in 2021 and 2022, that optimism faded. The Federal Reserve stepped in, raising interest rates to try to cool things off and bring prices down. And while those rate hikes have made some progress in taming inflation, they've also made borrowing money more expensive. Think about mortgages, car loans, or even credit card debt. It's all pricier now, which squeezes household budgets even tighter. Here's an interesting detail from the data. The recent drop in consumer sentiment is being driven especially by lower and middle-income Americans. Why is that? Well, these groups tend to spend a larger share of their income on essentials like food, rent, and transportation. When prices rise, they feel it first and hardest. Plus, if there's any hint that jobs might be at risk, that uncertainty hits home in a big way. Higher-income households might have more of a financial cushion, but for many Americans, there's not much room for error. So what are the experts saying? Some economists argue that this dip in sentiment is a warning sign. If people start to pull back on spending, that can slow down economic growth and make it tougher for businesses to expand or hire. On the other hand, some point out that the job market is still strong by historical standards, and wage growth has helped offset at least some of the pain from inflation. In other words, while people are worried, the sky isn't necessarily falling, at least not yet. It's also worth noting that consumer sentiment can be pretty volatile. Headlines about inflation, layoffs, or even political drama can swing the numbers from one month to the next. Sometimes people's feelings get ahead of the actual data. For example, retail sales numbers have held up better than you'd expect, given how gloomy people say they feel. That could mean we're all just a bit more nervous than we need to be. Or it could mean we're on the edge of a bigger slowdown. So where do we go from here? That's the million-dollar question. If inflation continues to cool and the job market remains resilient, we could see sentiment rebound in the coming months. People might start to feel a little more secure, open their wallets, and keep the economy moving. But if prices stay stubbornly high, or if layoffs pick up, those worries could deepen, and consumer spending could take a real hit. For everyday investors, this is a good time to stay alert but not panic. Keep an eye on the fundamentals. Job numbers, inflation reports, and how companies are talking about their own outlooks. Sentiment matters, but it's just one piece of the puzzle. Remember, the economy is always moving in cycles, and today's worries could be tomorrow's opportunities. If you found this breakdown helpful, don't forget to like, comment, and subscribe for more clear, unbiased financial news. And here's something to think about. With so many moving pieces in today's economy, how much do you think your own outlook shapes your financial decisions? Let's keep the conversation going and see where the next turn takes us.